Welcome to Wisdom to Wealth, where we talk to you about taking control of your money so that it doesn't take control of you. Thank you for tuning in. I am Whitney Hammond of Sovereign Wealth Management, and today we have Teresa Pelizzari, Financial Security Advisor at Sovereign Wealth Management. Welcome, Teresa. It's great to have you here today.
Thanks, Whitney. It's great to be here.
Awesome. So many of us do not have our financial house in order. And just when we think we do, something changes. These Wallet to Wealth discussions will provide a roadmap to find gems and avoid pitfalls. So, Teresa, today let's talk about making conscious life insurance decisions. So can you share with us the importance of taking a conscious, such a hard word, conscious approach when making your life insurance decision?
Absolutely. So first of all, if I step back to when I got my license for life insurance and investments, I asked myself, let's get really clear on what my goal is. What is it that I'm providing? What is my why? And I decided that my main focus was going to be helping clients get clear, provide excellent service, be easy to do business with, share options, and educate them. And so, went on my way of doing that. But, when it comes to life insurance and you get those calls that tell you that something unexpected has happened, and it's gut wrenching. And you had a conversation and you educated someone and you shared options and you shared costs and solutions. And then they were kind of like, well, you know what? It's either, not important. It feels like it's too much money, whatever the case may be.
Or so that they're not going to die. They're not going to die. I'm not going to die I'm not going to die for another 30 years.
100%. It's not going to happen to me. So I took a step back and asked myself, what is the missing piece here? And it isn't generally the money. It's perceived to be the money, but really is clients are getting conscious on what is this decision all about. And when you think about conscious, it's you need to get real. You need to use your imagination, and to the extent of what could the possible problems be. So you're painfully aware and sensitive to the possible outcome. And I really, really believe that's the missing piece. It's not the $50. It's not the $37 or $110. It is that moment in time of getting really conscious. And I know when I first got in the business, I thought, I knew it was important. I've had insurance since I was 20, but I felt like if I was trying to get people to understand the potential outcome, that I was being dramatic. And I am the last thing from a drama queen. So, that is the missing piece in my mind. And, we fall in the trap of being optimistic. Like you said, I'm never going to die. I'm just going to think that way, where if you just take 5 minutes and think about the people you've lost unexpectedly, it's crazy. And it doesn't take a lot of time, but it does take getting clear and real and optimistic about it to think about what if this happened. So while we make decisions on car insurance like this. So we're insuring a $40,000 car, which is the average cost of a car. And we pay $110 a month, think nothing of it, go on our merry way. But we won't take that same $100 and insure ourselves, and our families, to give ourselves a peace of mind. And most importantly is the loss of income coming into the house. So just to take a minute and think through a couple steps here. So, get real, make it conscious, be proactive, You don't buy car insurance after you get in an accident. You buy it ahead of time. So being proactive is the only way. It's not expensive. Do your comparisons, car insurance versus life insurance. It's, you can get $500,000 worth of life insurance for many people is $50 to $100. And the younger you are, the easier, the cheaper it is. And the younger you are, the most important part is what I did for my kids when they were 12 and 13 is protect their insurability. Because down the road, you never know when you'll go to the doctor and get news that you have even a blood disorder. If you protect your insurability at a young age, and we saw that in the past year with COVID, did anyone ever think, oh, we could all be wearing masks, we need to protect ourselves? That this is exactly, what we need to do is get conscious.
Absolutely. And we think about it, it's like, we have fire insurance on our house, and we hope that we never have to use the fire insurance.
Right.
And the same thing is about car insurance. But it is true. What I like what you're saying about the consciousness is to think about, okay, we're all death. There's only two things in life that are going to happen for sure, and that's death and taxes. So we can't get out of that. And so if you look at, well, if I passed away at 90, or if I passed away at 57 or 30, whatever it is, and to look at what would happen tomorrow if I wasn't here. So let's get that resolved. I've been in the life insurance business for 25 years, and my dad was in the business for 33 years. So we can tell you a million stories.
Right.
But the one thing I can guarantee you is, for sure, death is always untimely. And it's such a screw up. So for business partners, parents, spouses, like, it is a horrible situation. And for anybody who's watching, they already know that. So, take a look at this. I like what you're saying, Teresa. And I like that you have made yourself available to have, an interview with somebody to talk about this, and you're not pushy, which is great. You're a professional, and I love that about you. So this leads me to the next question. So Canada Life, they have some new products. So recently they've introduced My Term life insurance. So can you tell us how this benefits clients?
Yes, this was a really nice tweak in the products to benefit the clients, because in the past we had a choice of 10-year, 20-year, or 30-year insurance. Even though if you won the lottery and you decided you wanted to cancel it, you could. You weren't locked into that term, but you had to apply for the insurance. Let's say if you were 45 and you're 20 years from retirement, you would need a 20-year term. But if you were, say, 50, you would still have to buy that 20-year term to get you through to retirement age. Well, what Canada Life did is put in a new program and options, which is, as Whitney said, My Term. So that is anywhere from 5 years to 50 years. So if you only need insurance for 6 years, that's all you're applying for, and that keeps your costs down. So it's in 1 year increments. And so, as we talk about life insurance, the most important thing is, and as life changes, to always assess your needs. We're not looking to overinsure people, or as Whitney said, we're not looking to sell product. We're looking to help people protect their families and have that peace of mind should something devastating and unexpected happen. So, that is a great benefit that we now can provide our clients. And it's really important to think about your biggest asset. Many people think, and I know I asked a room full of like 25-year-old young guys this question, and they were like, what's my biggest asset? Well, my BMW is. And it's like, oh, how much is it worth? $80,000. Great. How much do you make a year? 50,000. Okay. Over 10 years, that's $500,000. So your loss of income is your ability to earn money is your biggest asset. And so life insurance can protect that. And, it's so inexpensive. So get clear on the cost, get clear on what your needs are. And most of all, get conscious on. And it's hard because, again, in my past, like I said, I can share all the facts, but I cannot, I need to do a better job of helping my clients get conscious so they're real, and that it's not me being dramatic saying, oh my God, this could happen. So, a final tip is be aware of the creditor insurance that's out there, where it's a little tick box, or maybe it's, if you don't tick the box, you're saying you want it. It's on credit cards, it's on lines of credit, it's mortgage
Some
applications.
mortgages.
It takes
It's on
seconds
more.
to make that decision. And
Yeah.
and you know what, I have come across clients that I can go through and get rid of 4 or 5 different creditor insurance that is costing them $250 and replace it for something that costs $62. So
Yeah, let me just jump in here, Teresa. It's really important to know. So, like I said, I'm a world of stories here, but there's one lady
yeah,
that comes to mind. She's still alive, and I've known her for 25 years. And when her husband passed away, they towed the vehicle off the driveway because the creditor insurance did not pay out the death claim. Okay, so there's a difference. When you're doing those little 3 questions, tick boxes, your life underwriting is done at the time of claim after you've passed away. So just the perfect crappy time to do something when you're all stressed out, to find out you've got to fill in all this paperwork. And then they say, oh, you know what? They didn't qualify anyways, versus having the contract with the insurance company who does your underwriting. So when you actually pass away, we don't need to pull your file. We just need the beneficiary to sign so we can pay you the check. And I also want to share another story too about mortgage life insurance. Okay, another true story. I won't mention the name, but a family member. His wife developed breast cancer at the age of 31, and they had the mortgage and life insurance through the bank, which most people do. And while she was going through her chemotherapy, she was too sick to work. So they went down to one salary. And of course, the one salary wasn't enough to keep the household, the mortgage payments, all of that going. So they ended up having to sell the house. So when they sold the house, the life insurance went out the window. She passed away within a year. That was the end of that. So they never lived in a house again after that. And there was a child. So it's really important to sit down and have a quick review about this, so you understand so the banks, brokers, like who are working in the debt consolidation, whatever, they're loaning you money. They do not have a life insurance license. And the other thing too, at the time of claim, you will not find that human being, because you go over to a 1-800 number and you sit in a pile of look what we're going through right now, that, let alone when days were normal, you go into a 1-800 monkey pile, versus with us, we do our own claims. And I've done, I don't know, I've probably done 1,000 life insurance claims in my career, maybe more. So, Teresa, thank you for talking about this. It's very, very important. And, Teresa will leave her information below in the comments, and she's always open to a call conversation. And let's talk about your life insurance. It's really important. It's important to have lots. I've got at least $12 million of life insurance. And if you really want to know why, you can write me and I'll tell you why. I didn't pull a rabbit out of a hat. We actually add up what happens if you pass away. What do we need? Most people can get away with 500,000 to $1 million. But when you do own a business, there's a lot more that we need. So thank you, Teresa.
Thank you, Whitney.
Yeah, and we'll see. Wisdom to Wealth is going to be on hiatus for a few weeks because I'm traveling in my plane. So I'll post. I'm going to be off for about 3 weeks. So we'll see you in 3 weeks. Thank you.
Thank you. Bye, everyone.
Okay. Bye-bye.